All right, what's up, team? We are live. I honestly don't even know where to begin because it's been a couple days since I made a video and so much has gone on. I don't even know where to begin. Let's start with, we're going to start with the market. I'm going to talk about interest rates, what's going on with the Federal Reserve. We'll talk about what they discussed today. Let's talk about what's been going on with the Federal Reserve. It just came out this week that the Federal Reserve, there's governors of the Federal Reserve. So Federal Reserve has banks in different areas, like there's St. Louis, Chicago, et cetera. And they have these different banks that have, they have different governors, different presidents, so on and so forth. And, it's been now made public that several of these Fed governors or Fed members, whatever you want to call them, were buying securities that the Fed was buying. So check this out. So they were buying mortgage bonds, knowing that the Fed was about to buy mortgage bonds and that the prices would go higher, and they were profiting from that personally. This was happening in the Federal Reserve. In the Federal Reserve. And so that's been going on. Now, as far as the market, before we talk about the Fed, before we get to some of these stories, before we talk about some of the macro stuff, we're going to talk about inflation today. I do want to talk a little bit more specifically local real estate mortgage here in San Diego. First and foremost, sentiment for buyers drying up like a bucket of sand, okay? And now that doesn't mean there aren't people who are interested in purchasing. It just means at this moment, buyer interest is waning significantly. For me personally, I'm still talking to a lot of people who want to buy. Just there's not a lot of motivation. There, you need to be pretty motivated to buy a home. It's a big commitment. There's a lot of reasons, that you could convince yourself not to do it. There's a lot of things that could get in the way of you doing it, complications, so on and so forth. So you need to be pretty motivated to do it. And we're just seeing that motivation level really not there. So a lot of people are just sort of taking their time, even in the very earliest stages of the process. So very, very strange feeling. Cyclically, we do notice that this time of year. So it's not like the end of the world, of course, but something that we're noticing. Now let's look at what happened today with interest rates. And this is where I'm going to repeat not to shoot the messenger. So today we actually only lost 2 basis points, which was pretty big. Barry actually missed it today. Barry Abib from mbshighway.com, which is where we get this information. He issued a lock alert today, which was actually misplaced. And we ended up rebounding significantly from there. But look at what we have here. This is what we call an indecision candle. Okay, anytime you have like a small, meaty middle, it almost looks like someone's been working on a corn on the cob from the outside in, right? So you got this little meaty middle here, but then you got these long wicks, both on the top and the bottom. It's called indecision candle. Now, some people in TA will tell you that this matters. TA Technical Analysis will tell you that it matters that this was green versus one like this, for example, up here, which is red. I will tell you that it doesn't matter. We have an indecision candle. Listen, the bond buyers are not sure if they want to be there or not. And so, listen, we did this exercise. We went back. The last time we saw this indecision candle, we went back and we said, okay, when was the last time we saw an indecision candle? Before that, it was right here. Okay. And there's been a few smaller ones, but these are the ones that are a little bit bigger and more significant. Most of these indecision candles have signaled tops. As you can see, huge sell-off here, huge sell-off here. Quick reminder, we want to see bonds go higher. Higher bond prices means lower interest rates. Lower bond prices means higher interest rates. So if you're rooting for rates to go lower, you want to see prices go higher. Bad news is the last 2 indecision candles we've had signal tops of the market. Now, the one thing that is good about this right now, if we look at this, is that in both of those cases, we were at a cycle high. So, here we were higher than the previous cycle high. Here we were higher than the previous cycle high. So it made more sense for a sell-off. Now we're actually at a cycle low, sort of a repeat cycle low, almost a double bottom, which would leave you to believe that, this should come up and test. But here's the problem. The problem is you have a big buyer that's going to start exiting the market soon. That big buyer is the Federal Reserve. Tapering. This is a word we've been talking about. So the Federal Reserve is buying and rebuying so they're reinvesting the interest that they're earning on the bonds that they own. That's one thing that a lot of people don't know about. And so they're buying tens of billions of dollars worth of bonds every month. And, you know, hundreds of billions, actually, if you include all of them, but tens of billions of mortgage bonds. And so they're going to stop buying as much as they've been buying. They're still going to be a buyer, but they're not going to buy as much, which means you have a big buyer that's slowly about to start exiting a market. And this is the problem with a public entity buying and selling stuff. They have to announce it, that everyone can see it coming. It's this big train. People try to get ahead of it. And so it would make sense to me if bonds sold off here. Remember, that has been my big concern the last few days. That's why I locked everything back here. And my clients really appreciate that. In fact, you can hear them right now, a rousing round of applause. Oh, no, it's too much. It's too much. Thank you. Appreciate you. But the bottom line is this could be a double bottom. We could move higher from here. It just doesn't feel that way. I hope that it goes that way. It just doesn't feel that way. We've got a couple pieces of resistance here right there. I mean, just there's so much resistance. This is a really rocky path. And with the Fed, a big buyer, exiting that bond market, I think we can expect interest rates to go higher. If you're looking to refinance, I would suggest you get locked in. If there isn't a ton of savings there, don't worry too much about it. If you're purchasing 100%, you need to pull the trigger, get locked in right here. Don't mess around. Get in a contract, get locked in, okay? There's risk here. There's big risk because if we break below these support levels here, which have held us twice now, if we break below that, we are cratering. That's right, we're cratering. If we break below that, we're not going to see, look at how far it is for support. Support is way down here. We will lose that 100 basis points or 90 basis points in a heartbeat. Okay, it will be a repeat of these two moves we just signaled right here that we just showed you were after these indecision candles, which we have a current indecision candle right now. So we got to be pretty careful here. Now, one of the things that was interesting, and this is an important bullet note from this, and I'll put this article in the YouTube. Economic projections pointed to slower overall growth this year, but higher inflation than previously projected. Remember when this all started? What I told you was the really, really big issue is stagflation. I have to look out for it. There's hyperinflation, there's stagflation. Hyperinflation is here. Everyone's trying to ignore it, trying to pretend it's not there. It's here. Stagflation is actually if we see a situation where we're not having growth, but prices are going up. That becomes a real problem. Okay, that becomes a real problem. So we're going to really keep a close eye on this data, and I'm going to make sure that you know what in the heck is going on. I also want to make it very clear. Right now, we are in a situation where bad for the economy is going to be good for real estate. We already saw that happen when COVID hit. That was not good for the economy. It was great for real estate. Why? Because real estate is something that everyone understands, and we have institutional buyers now for real estate. They're buying real estate instead of buying bonds. That's not going to stop anytime soon. Any dips in price, they will be buying. Institutional buyers are buying everything in Vegas under $500,000. They're buying tons of homes under $400,000 in Arizona. They're buying everything because the rents pay better than a bond, and they get tax benefits and a whole bunch of other reasons. So bad news for the economy is no longer bad news for real estate. It's not. You're not going to see a crash. It's not going to happen. The banks have figured out how to stop that from happening. It's called forbearance. Forbearance, also an F word that we probably shouldn't say, because literally it's the bank's way of taking more of your money. That's why they want to enroll so many people into it, and they'll roll anybody into it. Because either you're going to pay them back all the money you owed, which, by the way, they're getting subsidized by the government while you're not paying. You're going to pay them back the money that you owed, or they're going to tack it on the end of the loan, and then you're going to pay interest on that amount for the entirety of the loan. So it's a good thing for them, and it will stop any kind of crash from happening. Okay, so the banks and the government have figured out how to stop a crash, because the crash is bad for the banks. The banks are buddies with the big govies. Okay, so it's not going to happen. Now, you're going to see things like this. There's going to be more and more negative articles of real estate. They're going to continually try to, slap a negative twist on it. Existing home sales fall 2% as first-time buyers are priced out. First-time buyers, in some cases, are priced out. Sometimes that happens in any market. This is the overall macro concern. Eventually, and I'm telling you, we'll probably see this in our lifetime. If not, our children will. Only rich people will be able to buy real estate. That day is coming. We are on that path. We are walking down that path right now. And a lot of people are going to become rich because of real estate. They are. And a lot of people already have, but a lot of people in the coming, decade are going to become wealthy because of real estate. And it's going to price a lot of people out. You think people are priced out now? Just wait. Now, I haven't talked a lot. I haven't talked at all about the Evergrande crisis in China, and a lot of people are calling it, hey, this is a Lehman moment. Their whole economy is going to crash. It's going to ripple through, the globe. Not true. Remember, Lehman Brothers, the collapse that happened there actually didn't need to happen, and it was really, really unfortunate. But they made their own bed, and they had to lie in it, and it is what it is. And the same thing's going to happen with Evergrande. There are, and you can check this link out too. Now, normally Barstool Sports is like, more of an entertainment, not a news kind of thing, but they actually will show you there are ghost cities in China that were built by companies like Evergrande. They basically went and just developed stuff. They built, housing and commercial and roads, and they build all these things for nobody. There's no one who lives there. They continue to do stuff like that. And eventually that was going to become a problem. I don't know what China's solution is going to be, but they will be able to, they'll have multiple ways of solving this problem without getting anyone else involved. Remember, Lehman Brothers was tied into a whole bunch of things that were, let's see, where is the Lehman? Here it is. Lehman Brothers was tied into a whole bunch of things that were global, okay? They had global exposure, and everything that had to do with the previous real estate crash, the 2008 crash, was globally oriented because Wall Street had sold those terrible mortgage bond portfolios to countries all over the world. So, Evergrande is not in that situation. They're a Chinese developer. They're not a worldwide developer with projects all over the place and affecting all these different economies. No, it's a China problem. And there's lots of ways for China to solve it. So don't worry yourself too much about the whole Evergrande thing. You're going to see it. It'll be a non-issue here in no time. I thought this was interesting. Robinhood is launching cryptocurrency wallets as Bitcoin becomes a bigger part of the business. You're going to continue to see more and more news about Bitcoin, which, by the way, yesterday got under 40,000 briefly. Now back up to 43.5. Crypto's crazy like that. That's why I said if you're going to buy crypto, make sure it's money that isn't scared. Don't put any scared money in there because they'll scare you at some point. It'll go so low that you'll scare yourself and you'll sell it and then you'll kick yourself for the rest of your life. So don't do that. Buy a little bit every week. Don't even look at the price. Who cares? 10 years from now will be way, way higher than it is today. So just, bank on that. And if we're wrong, hey, it's throwaway money you're putting in there anyway, right? So that's the strategy to take with that one. Now, best case scenario. Best case scenario here is what? Well, best case scenario, see, this support line has held up for us in the past. Okay, this is where we bounced off today. Maybe I should refresh this so there's not so many lines in the road. This support right here, where you see these two lines, we've bounced off of this several times. This has been there for us. It's been a floor. It's been really, really good. Okay. So our best case scenario, after having gone up and touched this resistance 1 level here, we have this resistance 2 here, which is the 25-day moving average, has been a bear for us, been a real bear. And then the 50 days right here and the 200 days right here. Okay. So we've got headwinds, team. We really do. We've got headwinds, but best case scenario, somehow people get excited to buy bonds again, even though knowing that the Federal Reserve is exiting stage left, and we can sort of rip through all this at once. Now, we've done that once before. Remember, we got up to here and we're like, oh, sweet, we're there. And then the 25-day. We haven't been able to close above the 25-day for more than 1 day. So we closed above it here and then drop below it here. Closed on it here, drop below it here. Closed above it here, drop below it huge here. Closed above it again here. Drop down to it, and this is where I thought we had it. Okay, we were red. We closed just slightly above it, but then we gapped down hardcore in the next couple of days and really got ripped to shreds. So this 25-day is what I'm looking at. Okay, right now it's listed as R2. And so hopefully if we can just get through that, and get above here, that's our best case. I just don't see it happening, team. I just don't see it happening. So here's the good news. The good news is real estate values are really, really strong. This is putting people in great positions to sell by. This is putting people in great positions to refinance, particularly if you bought a home in the last year and you're paying mortgage insurance. Mortgage insurance, you only have to pay if you don't have 20% equity position. A lot of people have gained a 20% equity position, and prices in San Diego on average are up about 20% year over year. So if you bought about a year ago or even less than a year ago and you're paying mortgage insurance, you may not have to pay that anymore. You may be able to refinance out of that and save yourself some serious cash. I'm looking through my list of past clients all day today, found a handful of people who could easily save a bunch of money. So we'll see when people start getting off work if they want to move forward, stuff like that. But there's just a lot of those kinds of opportunities out there. So there is stuff that can be looked at positively here, even if we see rates go up, which I think is likely now. But I will keep you posted. The next couple of days are going to be crucial because the Fed announcement today will get absorbed in more detail by the market, and we'll see a true reaction tomorrow. Today was a reaction of anticipation. Tomorrow, reality will set in. Let's see what happens tomorrow with bonds. And of course, if you have questions about home loans in the meantime, give me a shout, call, text, email. I'll be here to help. Have a great day, team. We'll see you soon.